Good evening.
Hi.
Hi. Can you? Yeah,
Everything
we can
okay?
start.
Yeah. Okay, today we're going to talk about tax. I'm going to show you 17 loopholes, how people in America save tax.
Mm-hmm.
And you can relate to that, how you can do it in Vietnam. And you can talk about if it's going to work for you in there where you are in Vietnam.
Yes.
Right. So let's just start with this. So if you don't master your taxes, you'll work twice as hard for half the wealth.
Yeah.
So the rich people don't work more, they just pay less legally. So here are some loopholes that we can talk about. Right now, every country has its own tax regulations. But like I'm saying, what the people are doing in America can work for you and can work for me wherever we are in the world. Some of that can work, although the percentage can just differ here and there, but the principle can work. Right, so let's have a look at the first loophole. Right, so the first loophole is to employ your kids. Business owners pay attention to this. They hire their children under the age of 18. They pay them an amount of, say, $14,500 a year, tax-free. They deduct their salary from their taxable income, and they're turning their family into employees. It's not just being smart, but it's a legal tax loophole. Do you think you will be able to, will it work in Vietnam for you if you do something like this?
Employees of kid. Let me check. Pays them up to deduct the salary from. No, we don't have this policy because employee under 18, I think, is not allowed for employees them at a
Not
worker
allowed for,
or staff. Yeah,
yeah,
that's not allowed.
not allowed for taxable
And
deductions.
no, it's not employer must is not allowed to use people
Okay,
under 18.
okay,
Yeah, that's
right.
a regulation.
Okay, so
Like,
this one won't work in Vietnam for you.
yeah, no, yeah.
Right. Let's have a look at the next one. Capital gains versus ordinary income. So the wealthy don't work for money, they invest. The capital gains tax can differ between 0% up to 20% maximum. And 20% is lower than what an individual will pay tax on their income. So they hold assets for a year or a year plus to qualify. They pay less tax than employees earning a salary.
Mm.
So capital gains tax is when you invest into property, and when you sell a property and you buy again. You sell and you buy, you sell and you buy. So that is where capital gains tax comes in.
Correct.
So the profit that you are making when you are selling a property, that you will have to pay capital gains tax on, but that can differ between 0%, depending on the amount of profit you are making, up to a maximum of 20% in America now.
Yeah.
So how does it work in Vietnam?
In Vietnam, the capital gain tax is subject to ordinary rate 20%, but
Yeah.
capital gain tax from real estate transfer by individual. The tax rate, I think, 2%.
Okay.
2% on 2% on total value, but
Yeah.
they are not allowed to determine by, because it's difficult to determine the gain.
Okay.
So they deem on revenue on total turnover.
Okay, but you can gain by investing into property rather than keeping your money in the bank. You pay tax on your interest, right?
Yeah, right.
Okay, so this is a loophole that can
Yep.
work. Okay. Right, let's have a look at the next one. The 1031 exchange. So when you sell real estate, never pay capital gains tax if you reinvest. So you use your profit and then you reinvest them. You sell and you reinvest immediately. Then
It's not applicable in Vietnam.
is it not applicable in Vietnam?
Yeah, no.
Okay, so this one won't work there. Okay. Right. Self-directed IRA for real estate. Now, IRA stand for individual retirement arrangement or an individual retirement account.
Mm-hmm.
That is what IRA stands for.
Mm-hmm.
So you buy real estate inside your retirement account. So by doing that, you avoid immediate capital gains tax. You grow investments tax free or tax deferred. You use your rental income to build your wealth.
So
Is that something?
this concept also does not apply in Vietnam.
Really?
Yeah,
Okay.
yeah.
Wow. Okay. Right. Let's have a look at borrow against assets. So you never sell your assets. You borrow against it rather. So you take loans against your stocks or your real estate or your businesses. No income tax on borrowed money. The interest may be deductible.
Mm. No income, borrow money, street maybe deductible. They live. No, this concept also news uh from Vietnam. Yeah, we don't have this type of mechanism for
Wow.
deductible interest.
Okay, it sounds to me like Vietnam's got some very strict tax regulations.
We have a straightforward and much simple compared with so type typical transaction.
Yeah. All right. Okay. So other thing that the Americans are doing, they use the Roth IRA conversion ladder. So the Roth IRA conversion ladder is a multi-year financial strategy used to assess retirement funds penalty-free before the age of 59 and a half years by systematically converting traditional IRA or 401k 401,000 into a Roth IRA over several years. So each annual conversion becomes eligible for tax-free, penalty-free withdrawal after a 5-year waiting period.
Yeah, no, not applicable in Vietnam for this mechanism.
Not applicable
Yeah,
either.
yeah, not
Okay.
equal either. Yeah, IR is a very new concept in Vietnam.
Okay.
Yeah.
Right. Tax loss harvesting. So you turn your investment into losses. You turn your investment losses into tax breaks.
Mm-hmm.
So you sell losing investments to offset gains, deduct up to, that's what the Americans are doing. They deduct up to $3,000 in losses from income taxes. They buy back investments later to maintain their portfolio.
Mm. So all the loss from his investment can be offset as against future profits. So in Vietnam,
That's
it's
right.
there's no threshold like a 3,000.
Yeah.
Yeah, no, there's no thresholds.
There's no threshold.
Yeah.
Okay. Okay. All right. That's good. Right. Then medical expense reimbursement plan. So if you own a business, your medical bills can be tax free. You deduct 100% of medical expenses. It covers your employees and their families. It even works for sole proprietors.
Uh, in Vietnam, the treatment is different. Medical bill based on common based on like type common healthcare requirement per regulation that will be fully deducted for determining gain or profits, taxable profits.
Okay. All right. So there's definitely advantages when it comes to your medical provisions that you are making, payments that you are making every year.
Yeah,
That's tax
yeah.
deductible, right?
Right, on daily basis, tax deductible.
Yeah. Okay, that makes sense. Right. Then section 179 deduction for business owners. So you buy equipment, that's now business equipment, you deduct it all immediately. That is actually a no-brainer. We know all that we can do it. We claim in America, the Americans claim up to 1.25 million. In 2025, vehicles over 6,000 pounds qualify. Applies to office furniture, machinery, and software. So any investment that you are doing in your company, you can offset it against your tax.
In Vietnam, when owner having equipment, if they determine by uses purpose, if they use that equipment like a vehicle or house for business, which related to revenue generation, so those equipment costs can be deducted from taxable income.
Yes.
But otherwise, if fully for individual uses purpose, no. So
Yeah, and when it's
it's regardless their owner or investor or BOD board of director. This is treated consistently.
Yeah, so it must be for business purposes. It
Yes,
can't be
correct.
for it can't be for individual purposes. It must be
Right.
for business purposes.
Correct.
Then it's tax deductible. Okay.
Yeah, yeah,
Yes.
yeah. Less
Right.
complicated like this one.
Yes. Okay. Right. Then a qualified business income deduction. So if you own a business, you can deduct up to 20% of your income without expenses. It applies to CCs,
LLC.
to closed corporations. Yeah, and for sole entrepreneurs. So you don't need you don't need extra business expenses.
No, in
And it
Vietnam,
works.
we don't have this mechanism as well because all the expense must be related to business and must be uh, attached with invoice.
Okay,
Do
but
that.
if you say you're a company owner, right?
Mhm.
You invoice your company for your salary, right?
No, for salaries, no, but for expense, but salaries and no limitation. As soon as they can justify the salaries make sense and salary is subject to personal income tax. If they increase the salary, more personal income tax will pay.
Okay, I can tell you when I was the owner of a CC, I had several CCs in South Africa for a long time. During that time, the tax rate for CCs was 33%, and the individual tax rate was 40% at that point in time. So I was the business owner, and my income was generated through my business. So I paid only 33% income on my I paid only 33% income on my personal
Yep.
income.
It less than
Not
it
40%.
less than income for from employment income, right?
That's right. Yes.
Yeah.
Okay. All right. Then another loophole that the Americans are using is the health savings account. So the most tax advantage account in the US, it contributes pre-tax money. It invests in growth tax-free, withdraw tax-free for medical expenses. It's triple tax benefits only. Yeah. So health savings accounts where
Uh,
you where you save in advance towards your health expenses. So it's a health savings account.
no, not applicable for tax deduction in Vietnam.
Not applicable.
Yeah, not
Okay.
in America. They have many concepts.
Yeah. Yeah. Right. And then this one, I don't know where very well, the S Corp election tax savings. So when you make six figures, stop paying extra self-employment taxes. I don't know this one very well. Switch from LLC to S Corp, pay yourself a reasonable salary, take the rest as distributions, tax-free from payroll taxes.
Mm. But
Do you have,
what is
do you,
S scope stand for what?
I don't know. I don't know. I don't have this one. I don't know this one. It's the first time that I'm seeing this. I don't know. I don't have any knowledge of this.
Okay, okay, okay. That's fine. That's fine.
Yeah, let's just keep this one. Right. Then they have the Augusta rule. So you rent your own home to your business. You rent your home to your business up to 14 days tax free. Your business gets a deduction. You get tax free income. No need to report it to the tax authorization to the tax government authority in your country. Now, what I can remember when I had my offices was at my private residence. The size of the square meter size of my offices that we deducted from as a tax gain from my personal tax, because my property was registered in my personal name,
Mm.
but my offices was on the same stand.
Yeah.
So my business actually rented that square meterage of the offices.
Mm.
That square meterage my business rented from me.
I see.
Yeah. So this worked for me very well.
Yeah, 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 yeah. But it's not exactly the same with mechanism in Vietnam, right?
Yeah, I don't know how the tax law actually work in Vietnam. That's why I'm asking you this. We can talk about this. I don't know if it can work for you.
No, no, it's not work for Vietnam because uh, rent owner also renting out their property like house apartment to the company, right? And
Yeah.
they subject to different treatments. The income generated from renting activity subject to individual business income, and the cost, the rental fee made by business can get tax deduction for determination of tax income for businesses. So
I've seen
to
a lot of I've seen a lot of businesses in Vietnam where the people, and I've heard there's some sort of tax gain for them. They will buy a long story house with like 3 or 4 floors, and they open a shop at the bottom
yeah,
on the first floor.
yeah.
And then they get some, I've heard that they get some sort of tax reduction because of that. Or there's some sort of, yeah, tax deduction that they get, and it works quite well it's quite beneficial for the owner of the house to have a business on the first floor, but you live on top on the second and the third and the fourth floor, but you've got a business on the first floor.
Yes, yes. So that's one. They can get, but in that case, they had to transfer the property under ownership of the business is not under individual name. So that is
So the
something
property must be registered in the business name, not in your individual name.
correct. So
Okay.
yeah, a little bit different here.
Yeah. Yeah. Okay. All right. Right. Then they've got a state tax arbitrage. Now, this won't, okay, I'm not going to talk much about this because it's not applicable to Vietnam at all. Right. And then there's this one, the step up basis for heirs, people that are inheriting from you. While families pass on millions tax free from one generation to the next, when heirs inherit assets, their tax basis resets the market value. The capital gains tax on past appreciation. It works for stocks, real estate, and businesses.
Yep. So yeah, the some wording is quite mm, difficult to understand the concept, but hey, but anyway, this one something related to income from wealthy family for the future generation is something like that, right?
Yes. So
Yeah,
your son you make a inheritance to your son, for
yes,
example.
yeah. So in Vietnam, tax free or if the assets or equity transfer directly from parent to son or husband to spouse and versus
Okay, but that when it change hands, is it then tax free?
yeah, tax free, yes.
Yeah.
But
Okay. So
direct, but brother sister, no free, only a parent and children, wife and husband. Very
yeah. So
direct, yeah, very direct relationship.
yes.
Very close. Yeah,
Okay, I understand. Direct family relationships. Yes.
yeah, yeah,
Okay. All right. So this can work in this. This is applicable in Vietnam as well.
correct. Yeah.
Okay. Right. Then the foreign earned income tax exclusion. So when you live abroad, for example, you pay less tax. You exclude up to Americans can exclude up to $126,500 a year of incomes from U.S. taxes. Avoid state income tax by becoming a resident elsewhere. You combine with other deductions for ultra low taxes. So, okay, so say for example, you go and live in another country and you start a business there and you live there, you make a living there.
Yeah.
Will you pay less tax in Vietnam?
In Vietnam, even when someone live and work in abroad, and then rate or having income, they still subject to Vietnam personal income tax, but they are allowed to get tax deduction for what paid in overseas.
Okay.
Okay, but
Right.
yeah, the threshold is different with the fixed amount like this one.
Okay. Okay. Right. And then the last one, a charitable remainder trust, where you give and receive tax free. That is like we call it in South Africa, we call it the Article 18 certificate.
Mm.
So when you making a contribution to somebody's studies, or you just openly handed somebody an amount of money, and they are registered, then they can give you Article 18A certificate, and that money then is then tax free.
Yeah. So in
Or
Vietnam,
actually, it's not tax free. What I mean is it's tax deductible.
yes, right. So in Vietnam, I think it's also subject to tax deduction but they need to prove that the charity
Yes,
organization must be established under the law.
that's right.
Yeah, otherwise you give to anyone else, how can the government understand the money used for right purpose?
Yeah, yeah, they must be registered as a
Yes, yes,
yes.
officially and legally.
Yeah. All right. Excellent. Right. Okay. So those are the 17 loopholes that the Americans are using.
Okay, very nice.
Yeah, most of them won't work in Vietnam, right?
Yep.
I say most of them won't work there by you.
Say it again.
I say most of those loopholes won't work for you there in Vietnam. Most
I,
of the
I'm
loopholes that the
still,
Americans are using won't work for you there in Vietnam, right?
yeah.
Okay. Interesting. Okay, Mr. Vinh, we are done for today.
Thank you for sharing. Yeah. The one word is uh, in most of the case, the principle for tax deduction same everywhere, every country, but some particular
Yeah.
provision may different depending on characteristic or special treatment of each country. So very nice to see the American tax system you shared today.
Yeah.
Thank you.
All right. See you again. Goodbye.
See you. Yeah, bye bye.